When I first started trying to trade reversals, I would try to catch the very bottom of a market in hopes that I could capture the biggest move possible to the upside just to watch that market continue lower, hit my stop loss, and then turn around and go exactly where I thought it would go in the first place. Back then, I was losing like 80% of my reversal trades. And when I did win, I was winning with a very bad reward to risk ratio. Fast forward to now, I win my reversal trades about 50 to 60% of the time. And I win with an average of over a 2-to-1 reward to risk ratio. What changed? The only thing that changed is now I look for 3 really simple things on a chart before I place reversal trades. These 3 things help me to filter out bad trades and help me to only capture the most accurate reversal trades possible. Since then, reversal trades not only have become one of the most accurate things in my trading plan, but also one of the most profitable. So if you want to know the 3 things I look for before placing reversal trades, all you got to do is send me $100,000 a day, every day for the next 30. I'm just kidding, guys. I'm going to give it to you absolutely free in this video. All I ask is go ahead and smash that like button for me. Click subscribe if you're not already. If you already are subscribed, then welcome back. You know what's coming. Let's dive into the video. Hopefully we're all pretty clear on what a reversal is, but just in case you are brand new, a reversal is nothing more than when the price of an asset or a currency pair in this case reverses direction. So in the case of the Aussie dollar, as you can see, this pair is currently moving to the downside, making new lower highs and new lower lows, definitely in a downtrend. A reversal is just when that downtrend turns into an uptrend like you will see right here. And what I'm going to be showing you in this video is the 3 things I look for on a chart that give me the absolute best chance of capturing the very bottom of this move before the big move higher on this reversal. So let's start off with the first thing I look for when looking for reversal trades. Okay, here we are on the whiteboard, and first off, when I'm trading reversals, I'm using multiple time frames. So my trading time frames, where I actually place the trade, is going to be the 1 hour and the 4-hour chart. With that being the case, the daily chart is my higher time frame. The first thing I want to look for whenever I'm looking for reversal trades is that I'm in line with that higher time frame. So if this is the daily chart and I'm looking to trade reversals on the lower time frames, like 4-hour and 1 hour, then if this chart looks like this, what direction am I looking for reversals? I'm looking for them to the upside. And here's the reason why. I would be looking for bullish reversals in this example because what I'm trying to capture on my lower time frames, on the 4-hour and 1 hour chart with reversals, is the end of a pullback on a daily chart while we're in an uptrend. Okay, let me go over that one more time while it's already drawn on there because I know it can get confusing. What I'm looking for, and the reason I want to be aligned with this trend, is because on the daily chart, when we're in this uptrend, what I'm trying to capture with reversal trades on my 4-hour and 1 hour charts is the end of this pullback before the start of the next impulsive move in the trend on the daily chart. And the reason this is possible is because these pullbacks on the daily chart are actually downtrends on the 4-hour and 1 hour. We'll look at this on a chart, so don't let this get too confusing. We're going to go through multiple examples. But even though this is an uptrend on the daily chart, these pullbacks right here that I'm circling now are going to look more like this on a 1 hour chart. They're going to be little downtrends. And what we're going to capture is the bottom of that downtrend in order to catch this big impulsive move. At least that's what we're trying to do, is catch this big impulsive move on the daily chart. So that's the first thing I look for, is definitely going to be, I want to be in line with my higher time frame. So with me trading a 4-hour and a 1 hour, my daily chart needs to be in an uptrend for me to look for bullish examples and bullish trades with reversals on those time frames. The second thing I want to look for is that I'm in an area of value. So let's do this once more. For this is my daily chart. Then if I'm trying to capture the end of this pullback right here, again, this is my daily chart. If I'm trying to capture the end of that pullback, I want to make sure I'm doing so in an area of value like the previous level of resistance. So let's say this is the daily chart. My 1 hour chart, again, would look more like this, would be trending down. This is the area I want to start looking for those reversal trades. So that's the second thing I'm looking for. Number one, I want to be in line with my higher time frame trend. Number two, I want to be in an area of value. And number 3, I'm dropping down to a smaller time frame to look for some type of buying pressure so that I can try to capture that next big impulsive move to the upside in my daily chart trend. The reason I do this is because not only does this give me an extremely accurate place to trade, but also increases my odds of having a huge reward to risk ratio. Because if I'm getting in on a 1 hour chart, then my stop loss is going to be pretty small. And if I capture this next big impulsive move on a daily, then my targets are going to be pretty massive, right? And that's the main reason for these 3 steps, and probably the main reason that they have become some of the most accurate trades and most profitable trades I've had. Now that we've seen it on a whiteboard though, let's go check out some real examples. Down on the chart, we are going to start with the dollar yen. On this pair, we actually pointed out all of this last week in one of our videos, and what I'm going to do is play you a short clip from that video and show you a trade we actually took from this zone so you can see that I actually use this in my own trading. Then I'm going to break down these 3 steps, but on an actual chart to make sure you completely comprehend it, and we're going to go through a few more trades. So check out that clip. I'll be right back. Right in this level is an area I see as major support for this market. So if we get a pullback, a heavy one, into this zone between 104.56 and 104.26, I'll be looking there for possible double bottoms to push this market higher. So as you can see on the screen now, not only did we call this level in last week's video, but also we ended up getting a trade in the EAP training program. I sent this trade out to all of our paid members, telling them exactly where I was going to get in. As you can see on the screenshot, I told them I had an entry at 104.63, which was right out of our zone. And as I was saying, my stop loss was relatively small compared to the big gain I ended up getting out of this trade at about a 3.2 or 140 pips, 3.2 reward to risk ratio. But let's break this completely down in the same way I showed you up on the whiteboard. So first off, what am I looking for? What is the very first part of trading reversals? I want to see that I'm aligned with my higher time frame trend. At the time that we made this prediction, the market was about right here. What is my trend on the daily chart right now? Well, if we look at the chart, it's quite easy to identify. We have a low to a higher high to a higher low. This should be an H. I'm trying to make an H out of that, to a new higher high. So what trend are we in right now? This would be considered an uptrend. If we're in an uptrend, what am I trying to do? I'm trying to capture the end of a pullback so I can catch the next impulsive leg of this uptrend on the daily chart. So what I have to do in this case is wait for a pullback. Now, what's step number 2? I want to have that pullback, and I want to only trade reversals if I'm in an area of value. Would an area of value be the latest level of resistance broken? Well, yes, it would. So in this case, I know at this point that I'm waiting for the market to pull back to the area of value because we're in an uptrend. Step 1's finished. We're at an area of value now. Cool. All I do after I'm at the area of value is drop down to smaller time frames like the 1 hour chart and look for buying pressure. Now look at this huge green candle. Does this not scream buying pressure from an area of value while trading a reversal on a lower time frame and while in line with the higher time frame trend? Everything's coming together with this trade, and as you can see, like I said, ended up about a 3.4 to 1 reward to risk on the specific trade. And this is what I meant by the market being in a downtrend on a 1 hour. Here, if I was to show you this chart and just show you this, what does this look like? This is a downtrend, right? The market had a high, went to a low, lower high, lower low, lower high, lower low, lower high, lower low, and then started the uptrend. So essentially, we're trading reversals on our lower time frames, but the 3 things we want to look for, and I cannot hone in on this enough. Again, this has become one of the most accurate ways I've been able to start trading, is with being in line, at least trading reversals, is with being in line with my higher time frame trend. Only trading reversals in areas of value, and then placing my entry when I see buying pressure on smaller time frames. Next up, we actually have another trade to take a look at. And let's go ahead actually and play a clip from last week's video on the Aussie dollar, and then I'll jump back over here and we'll do the same thing to get you a better grasp of everything that's going on here with this reversal trading. I'll see you in a second. We have the Aussie dollar. The Aussie dollar is currently in an area of support I pointed out last week. We haven't really done anything from this area, so currently still looking for possible trades. And right now, we look like we might be getting, not quite there yet. So right now, on the 4-hour chart, if I end up getting, this is our first bottom, this would be our neckline, right? If I get a pullback that hits my termination zone, let me go ahead and explain exactly what I look for with double bottoms. This would be my termination zone. What I need to see is a candle whose wick, or witch's wick, whatever. I'm looking for a candle wick that touches this area, but I cannot see a close below it with a candle. As long as I get that, and also a candle can close inside of the zone, that's fine too. A wick can go past it, that's totally fine. The only thing I don't want to see is a candle close down here. But if I get the touch of this zone, followed by a green candle, I'll be going long here on the Aussie dollar based on that. So that's what I'm looking for on the Aussie dollar. Okay, so as you saw from that video, in a very similar way to what we were looking for on the dollar yen, is this market in an uptrend on the daily chart? Well, if we just draw it out, we have our low here to our new higher high, to our new higher low, to a higher high. All this is just the pullback until we break and close below the previous low. So yes, we are still currently in an uptrend on the Aussie dollar. Is this an area of value? Yes, it was the previous resistance that was broken in an uptrend, therefore it should become support if this market is going to head higher and break into new resistance levels. With those two factors coming together in that video, what did I say I was waiting on? The video you just watched. I said I was going to drop down to smaller time frames, and that if I ended up with a double bottom, which is buying pressure, a double bottom with buying pressure right here, that I would be entering that trade. Let's take a look at what happened. We get a little push down, another, big green candle. Did that qualify as a double bottom? Yes, it did. It touched the bodies of my previous bottom, and it did not close below the wick of my previous bottom. Therefore, this is a valid double bottom entry for me. So entering right there, as I said I was going to last week's video. After that, you can see the market just explode to the upside. As I said, this 3-step process is how I find the most accurate reversal trades. Although the Aussie dollar was in a downtrend, catching this bottom can be a lot more simple if you just add these 3 steps to your reversal trading. Let's take a look at one more trade before we move on to a couple other things I want to talk about in this video. And that is going to be on the dollar Swiss, where we had another very similar situation. Let's take a look at last week's video on this pair, and then we'll dive deep into exactly what we looked for with this trade as well. In terms of support, looking right down here at the previous most recent level of resistance that was broken. Because this is the most recent level tested, it also has been tested multiple times by this pair. So with that being the case, I now have resistance and support pointed out, and I know exactly what I'm going to be doing if this market continues higher or if this market turns around. If we end up pulling back to this area, looking for those double bottoms to push the market higher. So at the time of last week's video on this pair, you saw me say that this market was now in what looked to become a complete uptrend. We've now created this bottom, this head and shoulders pattern. We've essentially reversed on the daily chart. But if we reversed on the daily chart from a downtrend, now we're in an uptrend on the daily. Remember, we're aligning with that higher time frame trend. So if we're in an uptrend on the daily, what do I want to do? I want to wait for that pullback. I want to wait for it to start pulling back, because on lower time frames, that's going to give me a chance to catch a reversal to the upside for the continuation of the daily trend. So I know I need that pullback, and I know that I want that pullback to come to what I call an area of value, or the latest level of structure that was broken. Once that happened here on this chart, we actually pulled back into our level and dropped down to a smaller time frame. We actually had a trade in the EAP training program that you'll see on the left side of the screen right now, right here. Another trade that I sent out to all the paying members of our course, and this is how that trade played out. Ended up getting about a 2.26 reward to risk out of this trade. Here's the cool part about it too. Just because this trade ended up a winner, and I did get over a 2-to-1 reward to risk, this market on the daily chart didn't even come up and retest these highs. It actually didn't come up at all. If I click play, it's currently just kind of hovering around in our level of structure. But I've already taken profits on 2 different targets. One of those, which was a 2.26 reward to risk ratio. I don't need the market necessarily to go crazy and you know, have this huge impulsive move up. Sorry guys, my camera just got too hot, so you'll have to deal with not seeing my face for probably the rest of the video. But I'm not looking for this huge move up. Instead, I just need to see a bounce out of this market from this level using this reversal trading strategy. And that's the 3 steps I use when looking for reversals. I really hope you guys enjoyed it. If